You must have heard stories of successful investors such as Warren Buffett, who made a fortune and became billionaires, mainly through buying stocks and companies in the share market. So let's try to understand how the stock market works, what are shares, and a few fundamentals of the stock market. Welcome to Redefine Your Life, and don't forget to like, share, and subscribe. Let's start with an example. Suppose a person A starts a company and decides to launch it in the market. First of all, he or she needs to advertise and find big investors who will invest in their company. This will provide them with the initial public offering or IPO. An unlisted company announces initial public offering when it decides to raise funds through sale of securities or shares for the first time to the public. In other words, IPO is the selling of securities to the public in the primary market. Stock market. It is a place where shares of public listed companies are traded. One investor buys share from another investor at the prevailing market price or at whatever price both the buyer and the seller agree upon. But in order to scale their business and raise more money, they need more investors. Once their company is listed on the stock market, once people start believing in the company, their demand increases. More people are buying their stocks. Hence, the value of their stock increases. Stock represents the holder's part ownership in one or several companies. Meanwhile, share refers to a single unit of ownership in a company. The shareholders have a stake in the company now, as they have bought the equity or shares of the company. As the value of the company increases, the value of its stocks also increases. And in case the value of a company decreases, the value of the share also decreases. In this case, as the market value of the company declines, the investors might start selling their shares in order to maximize their profits before the stock decrease in value. Now, as more people are selling their stocks, the value of the company decreases and the value of the stocks also falls. The concept of demand and supply is affected by a lot of factors and is one of the most important aspects in deciding the price fluctuations of shares. But the modern day share market is influenced by multiple factors which are hard to predict. Hence, most of the investors prefer long-term investing in order to reduce the risks.